down, and now we'll start.
We will go live in 2, 1.
Okay, good morning, good afternoon, and good evening to my fellow honorable panelists and distinguished guests today. We bring together the United Nations Economic Commission for Africa, as well as the IDF for a joint convening on the theme, better reflecting risk management and insurance in the Sustainable Development Goals. My name is Ekoswehi Iyahen, and I'm the Secretary General of the IDF. For those of you who are less familiar, the IDF is a public-private partnership led by the insurance industry, but also co-chaired with the United Nations and the World Bank Group. And we have as our mission the objective to optimize and extend the use of insurance and related risk management capabilities to build greater resilience and offer protection for people, communities, businesses, and public institutions that are vulnerable to disasters and the associated economic shocks. I'm really honored to be able to moderate this discussion today and to help us over the next few minutes to remain focused on the theme, which I had articulated earlier, but also with the objective of allowing us to land on some very practical outcomes within the allotted time. So for some context to this discussion, I think and I hope that most of you who have dialed in for this conversation would agree that more than ever, there is a need for a systemic shift in terms of the way in which the world considers risks, but also leverages risk management tools and instruments to support greater resilience and the attainment of the Sustainable Development Goals. The 2030 Agenda for Sustainable Development and the 17 SDGs have been a remarkable force in terms of generating consensus between member states and driving a shared blueprint for peace and prosperity. They've also contributed to a shared recognition that ending poverty and other deprivations must go hand in hand with strategies that improve health and education, reduce inequality, and spur economic growth, all while tackling climate change. And more than ever, we are also seeing a convergence with the private sector on these goals. And these SDGs also increasingly becoming a necessary part in terms of how markets operate, and again, reflecting on climate change and the importance in that context. But we also know that there is a lot that needs to be done. The past 2 years in particular have demonstrated the profound weaknesses in terms of how the world understands and manages risks. And there have been profound consequences as a result of this gap in terms of the impact on lives and livelihoods. This roundtable is therefore part of a journey that many within the insurance development space and in fact the broader development community have been focused on. But there's now an urgent imperative for the insurance industry and also the broader development community to advocate for better reflection of risk management principles and insurance within the Sustainable Development Goals. So to unpack this theme, we have pulled together quite a fantastic lineup of speakers to offer their reflections personally, but also from an institutional perspective. And really thinking about what does this mean when we say advocating for better risk management and insurance in the SDGs? Why does this really matter? What precisely are we advocating for? And how can we move from discussion to reality of implementation? My expectation, as I mentioned earlier, is that over the next 45 minutes, we will not solve the world's problems. But what we will do is have a textured conversation and hopefully leave with a series of clear recommendations that can move this conversation forward. So to set or to add to the context of our conversation this afternoon, morning, or evening, depending on where you are, I would ask that the colleagues just play a short video from our friends at WFP, who have also been doing quite a bit focused on microinsurance. So please play the video.
Ndakula kwedrought regore rino ndakarasikirwa nemombe dzangu 6 ndikarima munda zvikatsva ndikakwanisa ngokuwa bhagidhi nehafu chete.
Chaka chatha ndinakulola matumba 10 a 50 kg. Koma chaka chino chifukwa chonera kuti mvula kuyambira pa 1 January kufika pa 25 January sinabwere, imene itandipangise kuti ndikulole matumba awiri amene nditi adye kwa miyezi iwiri. Ndi insurance tapepesedwa ndalama yokwana 38,050 kwacha. Ndalama imeneyi yandithandiza kugula chakudya pa khomo panga, komanso ndagula mbewu zakudimba zimene zitandithandize m'tsogolo muno ndikazakolola.
Okay, thank you very much for that video. So obviously, the video provides some reflections in the context of weather shocks, but we also know that poor and vulnerable communities also are faced or have to contend with other types of shocks to their lives and livelihoods, if it's income, health, etc. But we thought it important to offer that context. And that body of work also sits in a 10-year evaluation conducted by the WFP on microinsurance programs focused on particularly vulnerable households. And there have been some remarkable results from that. And some of these include 100% increase in household savings for those households that were covered, 400% increase in terms of loans received. So I hope that offers some food for thought when we think about the role of insurance in helping to deliver resilience for these communities and the importance of improving access risk financing solutions. So without further ado, I would now like to invite opening welcome remarks from our patrons for this event. We will start with remarks from Denis Duverne, who is the chairman of AXA as well as the IDF, followed by opening remarks on behalf of Dr. Vera Songwe. We have Mr. Jean-Paul Adam, who is the Director for Technology, Climate Change and Natural Resources Management Division within the Economic Commission for Africa. Unfortunately, Dr. Songwe is not able to join us due to some other events which have emerged, but as given the topic, we will adapt for today's event. So thank you, Jean-Paul Adam, for joining us. And that will then be followed. We are really honored to have some remarks from the Deputy United Nations Secretary General, Amina Mohammed. So please, over to you, Denis Duverne, for your welcome remarks.
Thank you, Ekoswe. Good morning, good afternoon, and good evening, my fellow honorable panelists and distinguished guests. Today, as Ekoswe said, we bring together the UN Economic Commission for Africa and members of the Insurance Development Forum for a leadership roundtable discussion on the topic of better reflecting risk management and insurance in the Sustainable Development Goals. While some progress has been made by many countries to increase their resilience to the physical and financial impacts of climate change over the years, with the signing of the Paris Agreement at COP21, and more recently, the discussions in Glasgow at COP26, the urgency is escalating and the demand for risk mitigation and adaptation is accelerating. This movement has been further amplified with the impact of COVID-19 on lives and livelihoods through 2020 and 2021, with the resulting economic shocks on the economy. Since its launch in 2015, the IDF has driven significant efforts to close the large and even widening protection gap of underinsurance, with most developing countries averaging 1 to 2% of GDP insurance penetration rate, compared to over 8% in most developed countries. This startling rate of underinsurance is of enormous importance, as it is an indicator of socioeconomic resilience. In fact, insurance contributes to a large number of the SDGs as a resilience mechanism provided to individuals, companies, and for public and sovereign authorities. This is first because insurance products provide the flow of capital to support communities and infrastructure to recover when disaster strikes. Without adequate risk management, particularly stemming from insurance, the burden of paying for losses falls largely on individual citizens, governments, or aid organizations. This lack of a social safety net leaves individual families and communities exposed. Currently, 150 million people suffer financial catastrophes each year due to out-of-pocket expenditure on health services. In contrast, countries with high insurance cover rebound more quickly from disasters. Secondly, insurance contributes to wider understanding of risk and can help promote more empowering measures that communities can use to improve their resilience to disasters. This is really essential for vulnerable populations who often live one disaster away from poverty. At all levels, from inclusive insurance to sovereign level programs, insurance allows for better informed resilience decisions. For example, insurance expertise in risk evaluation helps to make the economic case for flood defenses, for mangroves rebuilding, or for changes to how and where buildings are constructed. Thirdly, insurance has a key role to play in addressing climate change. The Task Force on Climate-Related Financial Disclosures has recognized the importance of addressing environmental risk as part of the international financial system and factoring the importance of insurance as a means of mitigating that risk and building long-term resilience. All this being said, and despite insurance potency as a tool for development, insurance is mentioned just once in the Sustainable Development Goals. Risk is mentioned as a target just 3 times out of 150 plus listed and 6 times out of 200 plus unique indicators. Resilience is mentioned as a target just once out of 150 plus listed and not once out of the 200 plus unique indicators. As a result, insurance and by extension, broader risk management techniques and principles are often not a central pillar of the work of development institutions, despite growing consensus around the fact that developing insurance market and risk management capacities could dramatically increase the efficiency of adaptation, resilience, mitigation, and development efforts and outcomes. A lot of the work on climate change is focused on mitigation, whereas climate change is already here and adaptation is essential. More and more voices have been expressed, especially this year, on the value of ex-ante financing versus ex-post, whereas 55% of natural catastrophes are predictable. Only 2% of the development finance is spent ex-ante versus 98% ex-post. By contrast, in recent years with the triple crisis, there has been a significant increased emphasis across the financial services industry, and particularly the insurance industry, on ESG, environmental, social, and governance consideration, with the SDGs serving as a global compass to guide core business towards growing sustainably. Insurance organizations are an essential part of the ESG movement, both as investors and as underwriters. Ultimately, the SDGs are about people and represent an urgent call for action by all countries in the global partnership. They recognize that ending poverty and other deprivations must go hand in hand with strategies to improve health and education, reduce inequality, and spur economic growth, all while tackling climate change. Risk management and insurance have a role to play across the spectrum of the SDGs and must be more visible if we are to truly create a more resilient world where risks are better understood and people and what we value are better protected. So today we come together as experts and engaged leaders in our respective fields with the objective of identifying practical steps we can take to mainstream risk management and insurance in the Sustainable Development Goals. We do not need another crisis to prompt action. I'm looking forward to our fruitful discussions, and I am optimistic that we can find solutions together to engage with the broader United Nations system and identify the appropriate processes to develop a plan of action. Thank you very much. And I leave the floor to Mr. Jean-Paul Adam from the ECA to continue with the welcoming remarks and hopefully to help us go through the United Nations systems to include insurance metrics in the SDGs. Thank you.
Thank you very much, Monsieur Duverne. First of all, I would like to, on behalf of Dr. Vera Songwe, express her apologies that she could not be with us in person for this extremely important event. But I would like to reiterate the commitment of the United Nations Economic Commission for Africa and the United Nations in general in terms of the support for better reflecting risk management and insurance in the Sustainable Development Goals and developing concrete interventions that we can implement together. So I would like to warmly thank the Insurance Development Forum and all of our partners for the partnership that we have already developed in putting together this event. And more particularly, I think, on the concrete actions that we can develop to support member states. So first of all, I think it's important that we look at the question of better reflecting risk management and insurance in the context of COVID-19 and the impact that this is having on global inequality. COVID-19 has really emphasized how there is a divergence happening at the global level, and this is exacerbating inequality, which was already a major factor in development in the world. The implementation of an appropriate insurance mechanism, particularly for developing countries and particularly for African countries, is one of the key actions that we can take to actually address resilience and address inequality. We have seen that in relation to the SDGs, in terms of SDG 1, for example, in COVID-19, there is an additional 119 to 124 million people who are pushed back into extreme poverty, while the global poverty rate is projected to be 7% in 2030, which means we are missing the target of eradicating poverty as per SDG 1. In terms of SDG 2 and eradicating global hunger, 70 to 161 million people are projected to have experienced hunger over the last 12 months. And the number of undernourished people is increasing. And most importantly as well, this is increasing the risk to vulnerable people, including women who are being affected by, for example, nutrition deficiencies and anemia accordingly. And in terms of SDG 3, in terms of health, we are still seeing the impact that the COVID-19 is happening globally, and that there are 4 billion people who are still not covered by any form of social protection. We are also seeing that in terms of economic productivity, the COVID-19 pandemic is affecting global manufacturing, where this has plummeted by 6.8% over the last 12 months. And almost 300 million out of 520 million rural dwellers lack access to appropriate transportation networks in 25 countries. We are also seeing severe limitations in being able to address climate resilience, and investing in insurance is going to be one of the key areas of addressing some of the gaps in climate finance, which unfortunately have not been addressed in the recently concluded COP26 event. We have seen that climate investment, particularly in adaptation, remains inadequate. And despite the commitment at COP26 that there will be a doubling of climate adaptation finance, we must recognize that we are starting from an extremely low base. The African Development Bank has estimated that just to achieve the commitments of African countries through their nationally determined contributions, we will require $3 trillion of investment by 2030. And this means mobilizing resources from multiple sources, but it also means reducing the impact of climate events. And as we saw recently in the video, but also recognizing that climate change is already one of the biggest contributors to economic losses on the African continent. It is estimated that African countries are spending between 9 and 10% of their budgets in responding to climate-related environmental emergencies, whether they be droughts or floods. And African countries are estimated to be at risk of losing between 3 to 5% of their GDP by 2030, linked to climate change. In some extremely vulnerable regions, such as the Sahel, these losses may reach as much as 15% of GDP. Insurance can prevent financially vulnerable people from falling into poverty and addressing many of the issues that we have seen around COVID-19. Agricultural insurance can also help smallholder farmers build resilience against losses from adverse events, and also strengthening access to credit and incentivizing investment. And 80% of workers in urban informal markets in Africa are the hardest hit by COVID-19, but have limited protection. And uptake in Africa, unfortunately, remains the lowest at 3.5%, which compares to 46.2% in Asia and 13.5% in Latin America and the Caribbean. We need to address these issues fundamentally if we are going to truly achieve the Sustainable Development Goals. Health insurance lowers or removes financial barriers to obtaining healthcare, for example, and insured households are less likely to incur out-of-pocket health expenditures, and therefore also helping to address the risks to SDG 1 about reducing poverty and hunger, SDG 2. Insurers can also ensure the availability of health insurance that covers sexual and reproductive health services. And we should note that 70% of the population, particularly in Africa in the informal sector, do not have health insurance cover, and 60 to 70% of healthcare expenditure is paid directly from out-of-pocket expenditure. We look forward in this discussion to also see how insurers can contribute towards addressing vulnerability and particularly gender equality. We also believe that adequately investing in insurance is one of the prerequisites towards channeling sustainable investment into the continent, and recognizing in particular that Africa is underserved in relation to climate resilience investment, recognizing that overall, while Africa benefited from around 23% of total public climate finance globally, Africa actually was able to mobilize less than 3% of global climate finance funds. And that's particularly because Africa is seen as risky for investors. And this is one of the critical factors that we need to address to be able to deal with this $3 trillion opportunity for investing in climate resilience in Africa. So following these opening remarks, I now have the pleasure to introduce the intervention from Her Excellency Ms. Amina Mohammed, the Deputy Secretary General of the United Nations, and who will be clearly emphasizing the importance that this has for the UN system, and also emphasizing the opportunity of work that we will be taking going forward. Thank you very much.
Excellencies, it gives me great pleasure to join you for this joint UN Economic Commission for Africa and Insurance Development Forum Roundtable. More than 18 months into the global COVID-19 pandemic, millions of lives have been lost and the human and economic toll has been unprecedented. Deep inequalities are spread across all dimensions of our societies, from the uneven distribution of income to insufficient access to health and social protection, gender disparities, and digital gaps. Despite the global economic slowdown, greenhouse gas emissions continue to increase. According to the most recent report by the Intergovernmental Panel on Climate Change, unless we change our current trajectory, we can expect to cross the threshold of a temperature rise of 1.5 degrees in the 2030s. While reducing emissions is vital, preparing for a future of more frequent extreme weather events is also paramount. Insurance provides an important flow of capital to support communities and infrastructure to prepare and recover when disaster strikes. Without insurance, losses fall largely on individual citizens, governments, and aid organizations. Insurance is a critical resilience mechanism for individuals, companies, and public authorities that support the success of the Sustainable Development Goals. And yet, when it comes to insurance, stark global inequalities are holding people and communities back. In developed countries, insurance penetration rates are over 40%. In developing countries, they average between 1% and 3%. This level of underinsurance is both a cause and an effect of a lack of socioeconomic resilience and major gaps in social protection. Insurance contributes to a wider understanding of risk and promotes measures that governments, institutions, and individuals can use to improve their resilience to disasters. But insurance markets in developing countries have very limited capacity to mitigate risks compared to the scale of the needs. To solve this, we need a revolution in the insurance world, starting with clear global targets for risk prevention and resilience, and encompassing access for all to sustainable insurance products. Private and social insurance systems must become truly global in scope, in close collaboration with multilateral and financial institutions. Insurance must also be linked closely to policies on social protection to prevent people, including those working in the informal sector, from falling into poverty. The pandemic makes it clear that the world must scale up its efforts to become more resilient, sustainable, and inclusive in preparing for future shocks. The insurance industry must have a central role in this transformation. We are ready to work with you to seize this moment and make this decade of action, transformation, and restoration to achieve the Sustainable Development Goals and make good on the Paris Climate Agreement by 2030. Thank you.
Okay, thank you. Thank you very much, Denis Deverne, Jean-Paul Adam, for your remarks, as well as Her Excellency Amina Mohammed for those thoughtful comments and really driving home the importance of this agenda. So we've heard a lot from various speakers. I think it's now time to turn to the discussions. And I'm pleased to say that we have today joining us Olga Algaerova, who's the Executive Secretary of the United Nations Economic Commission for Europe, as well as Catherine Pulvermacher, the Executive Director of the Microinsurance Network, and who's also the co-chair of the IDF Inclusive Insurance Working Group. So Jean-Paul Adam, as well as Denis Deverne, will be joining the discussion. Unfortunately, Her Excellency, Dr. Yasmin Fouad, who's Minister of Environment for the Arab Republic of Egypt, is not able to join us due to some last-minute emergencies. But with that, I will now turn to you, Catherine, and put you straight in the firing line. The issue of insurance obviously speaks to fundamental concepts around protecting lives, livelihoods, and the things that we valued. And we heard a lot about social protection systems. I would like you to start by expanding a little bit on the work that you're leading at the MIN, and really share insights into the risks and shocks that often can be huge disruptors when we think about vulnerable communities, right? So we hear a lot about climate, but there are also shocks that vulnerable communities face. And I want you to expand on that a bit. The second question, that I would also pose to you is, when you consider Africa and developing countries, and the fact that, how do we begin to reach people and close this protection gap when 70% of the workforce in developing countries are in the informal sector, right? And also, when you consider this absence of social protection systems, how do you begin to tackle this issue? And so for me, it would be great to hear your reflections on that against the backdrop when we think about technological advances and also some of the remarkable demographic changes that we are seeing across the continent and in many developing countries.
Great, thanks, Ekasui. So I'd like to share my thanks to you for organizing this panel and to my fellow panelists, and of course to the many people with us in the room. Thank you all for the time that you've taken to prepare, for your commitment to all of us, because this is about all of us, and I'd like to touch on that a little bit. So the risk of going this sort of after the other speakers, so for the people in the audience, what I'd like you to know is we haven't actually compared notes of what we were going to say, and so please don't be disappointed if we all say the same thing. I see this as a very, very positive outcome because we're all aligned, and I think that we need to be repeating these messages clearly and really saying them over and over and over again, because the communications aspect of this in terms of driving change is incredibly important. So let me now return to what I was going to say. I think often when I have these discussions, I think about a couple of things. So the first thing is that we often hear these very large numbers thrown around, and it's useful to have some context. So we know that we've mentioned the number of the 4 billion that are unprotected, whether it's 4 billion or 5 billion. The reality is that we don't know exactly, but we know that the order of magnitude is somewhere between 4 and 5 billion people. That's lots of zeros. Even as an economist, I struggle to make sense of all of those zeros. But to give it some context, the population of Europe is just under 450 million people. So we're talking about 10 times the population of the EU has no social protection or access to insurance. Think about it like that. The other useful starting point, because it's very easy to be abstract when one's thinking about these ideas and the frameworks. And so I like to take a moment to bring this right back home to us, right? And most of us here on the panel, I mean, I know that Denny lives in France and Ekosui lives in the UK. I currently live in Luxembourg, used to live in Switzerland, but I've also lived in Africa. So I'm very mindful that each country has a different specific context. And I'd like you to take a moment while I'm thinking to just pause and reflect on how we as individuals expect to cope when bad things happen. And the first point, of course, that as humans, we're wired to believe that bad things won't happen to us, but let's park that for the moment because we know that they do, and they happen with increasing frequency. Unfortunately, a bad thing, an unfortunate event that can have more or less permanent or long-term consequences is very different for a low-income household than it is for an affluent household or most households living in a country with good social protection mechanisms and established insurance systems. So in general, mostly we are salaried and we can expect unemployment insurance to kick in if we lose our jobs. When we're ill, there's generally not only good access to healthcare, but mostly the costs of that are covered. And through social security contributions, we see a certain redistribution of income in most of the OECD countries. Now, I know that these systems are not perfect. People fall through the cracks, and they don't, when insurance kicks in, it doesn't, how can I put it? If you think of a broken vase, it's not that the broken vase that is put together back together with the glue of insurance is a perfect vase again with no fractures. We know there are often long-term consequences even when something is insured, but insurance does help, whether it's funded through the public purse or privately. Now, these systems, these social security systems, they aren't perfect, but they do provide a safety net that is largely absent in the global south, or where it does exist in the global south is very much constrained by the fact that those labor markets are largely informal. So I know I'm repeating some of the points that were made, but I think they can't be repeated enough. And so we see these national governments working with a very tiny income tax base. Even in a country like South Africa, there are more people registered as formally unemployed than there are people paying income tax. To give you an idea, that's an upper middle income country. So you have this very tiny income tax base with a very small share of people that have jobs in the formal sector and a very tiny social security pot. That really is a limiting financial constraint on the type of redistribution mechanisms that do provide buffers and safety nets for us, right? And beyond the states, even private sector insurance is very limited in these markets. I think it was Ekosui who cited the insurance penetration, the relative insurance penetration. Now, in our work at the Microinsurance Network, and just by way of explanation, we call ourselves microinsurance because our focus is very much on low-income people who do not have access to insurance or social protection. And in our work, we've been monitoring 30 countries, more or less 30 countries. We'd love to do more, but for the moment it's 30, to evaluate the number of people living on low incomes, so earning less than the equivalent of $600 a month on a purchasing power parity basis. And we know that when even ordinary things happen, these families are very compromised. In fact, the lockdowns that were imposed to manage the public health crisis had a knock-on effect, which, as Jean-Paul mentioned, has seen the middle class everywhere shrink, meaning that millions and millions of people have fallen back into poverty. So there is a real people protection gap, and to get anywhere near closing it, public and private sector collaboration across different value chains, not just the insurance value chain, different value chains, is absolutely critical. And to come to the second question that you asked, Ekasui, fortunately, we're not at the very beginning of this journey, but we are at an early stage. So this focus on insurance, inclusive insurance, is really only 20 years old. The momentum around collaborating to find solutions to that work, to find solutions that really work, has been gathering, and this meeting is a product of that. We're all collaborating very closely. Now I believe we really need to shift gear, because this is an emergency and it's intrinsically linked to climate change. We know that the risks are increasingly compounded and interrelated. So to bridge the gap.
So Catherine, you've raised some good points, right, in terms of making it very material for us. But I'd like to switch over to Denny Duverne, given what you've raised, right? Denny, you represent, you're the chairman of AXA as well as the Insurance Development Forum. And Catherine has given, and I mean Jean-Paul as well, very significant figures and made them very real for us at the same time, right? When you consider this and also the realities of many developing countries, how do we begin to address this issue again from your perspective, sitting with your private sector hat on, this question of insurance in developing countries and given the challenges that exist? I'd like to hear from you on that. I'd also like to hear from you in terms of what are some of the innovations that you're seeing that are allowing us to actually get to people, right? Because there's one thing in terms of identifying the problem, but then there's another thing in terms of what solutions are actually out there. So if you can just offer some quick thoughts on that, that would be really useful. You're on mute, Denny.
Sorry, very quickly, can you hear me now?
Yes.
Yes. Two very important points. The first is to completely rethink the design of insurance solutions. For example, in mature markets, in developed markets, there are quite often exclusions for some customers. For example, on health insurance, pre-existing conditions are excluded. And given that we are addressing populations that have little or no experience of insurance, we need to radically simplify the customer journey and the customer products. And this is what we've learned with our division, AXA Emerging Customers, that we created in 2016. And we now insure more than 20 million people in 9 countries. For example, in Egypt, we are insuring 700,000 female micro business owners with a policy that pays a lump sum for every night spent in hospital from night 1. Any hospital for any condition, 0 exclusion. So we need to price the lack of exclusion into the product itself, have a no bad surprise claim process, and we also save time and money managing simpler claims. The second very important point is the role of public-private partnerships. And the IDF is a very good example of that. In 2019, we signed a tripartite agreement between BMZ, the German Ministry of Cooperation and Development, United Nations Development Programme, on insuring 20 countries by 2025 on climate risk. And this requires some premium support, because the emerging markets quite often cannot pay the totality of the premium. And so there is a need for premium support. The Insure Resilience Global Partnership, led by Germany and the V20, the group of 55 most vulnerable countries, have approved recently principles for premium support, which I believe are very valuable. And when you think about it, take agriculture insurance as an example. In mature markets, this insurance is heavily subsidized by the state. It's true in the US, it's true in France. Why not in emerging markets? So premium support is essential and public partnerships are essential. And to your last question on innovation, clearly technology allows a lot of progress, and I can give you 2 examples. In South Africa, an insurtech startup, Lumkani, has developed affordable fire detectors, which combine them with fire insurance for rural and informal settlements. Parametric insurance allows to simplify the claims process using satellite data. And finally, in India, an insurtech startup called Dvara eDairy aims to overcome the fraud in cattle insurance by providing muzzle recognition technology to seamlessly identify each animal. So technology is clearly important.
Thank you, Denny, for that. I'm going to take a liberty and go back to you, Catherine, right? Because Denny has touched a bit in terms of simplicity of product, a rethinking in terms of the offer when we think about these communities in order to begin to close this gap. But he's also touched on elements as relates to tailoring, for example, treating to certain dimensions, gender dimensions in terms of the offering. So I want to get back to you on this question of insurance and financial inclusion, right? What are the challenges that we are seeing there? Because when we think about financial inclusion, yes, there's been a lot of focus on credit, payment, but less so on insurance. What do you think are some of the challenges in terms of bridging that? Because I think that is also part of how we take this conversation forward. Just your reflections on that.
So I think it's pretty simple. I think there are 2 very simple answers to that question. So the first is that microfinance, microcredit is older. It's a more mature sector. Yeah, I mentioned the 20 years earlier, which is really as far back as thinking about insurance for emerging customers or microinsurance. That it's only 20 years old. You know, it's barely got its vote yet. So I think that is one aspect that is absolutely critical. I think another aspect is that we tend to work in silos, right? So where the insurance community are talking to themselves, microfinance people talking to themselves, and the term financial inclusion is a relatively recent arrival, right? It was microfinance until very, very recently. And so I think to overcome that challenge, we need more cross-sectoral collaboration and discussions. And really need to drive that. You know, not everybody needs to be at every event, but what we do need to ensure is that the cross-sectoral and conversations are happening to foster this kind of collaboration and inclusion. And then I think the last point that I would make is I think the insurance sector generally probably needs to up its game in terms of communicating more effectively. I think if you think about insurance being dominated by economists and actuaries, we're probably not naturally the most outgoing people in the world. But I think we have important lessons to learn from the way that climate action campaigns have been rolled out over the last 10 years, right? And 10 years ago, people didn't think anything about using a plastic bag. These days, it's you'd sort of be looked at in horror if you used a plastic bag. And I think we need to do a better job of communicating the messages that we've been talking about now to as many different stakeholder groups as possible. And that will overcome some of the challenge.
Okay, thank you, Catherine. I'd like to now turn to Executive Secretary Olga Algaerova, who's the head of the Economic Commission for Europe. Earlier this week, you wrote to the heads of major insurance companies on the issues of global road safety and SDG targets 3.6 to have road traffic deaths and injuries by 2030. It would be great if you could expand a bit on what is this initiative about and why insurers and why road safety. Part of, I think, the challenge to the point that Catherine made is how do we communicate the convergence between the role of insurance and deeper risk management? So risk reduction, for example, right? There are lots of synergies and opportunities there. So it would be great to also hear your reflections on this topic and how you're reviewing it from from your commission.
Thank you so much, Ekosue, and good afternoon, everybody. Really, I would like to express my thanks for inviting me to speak about the road safety with insurance platform here. Well, the question is well posed, and I also would like to thank to Vera Songwe, my dear colleague from the African Regional Commission, for making it possible for me to speak here. I start with some numbers, some statistics on this. 1.35 million people die each year as a result of road traffic crashes, and 1 million of those deaths take place in low and middle income countries. But what is even worse is between 20 and 50 million more people annually suffer non-fatal injuries, with many incurring a disability as a result of that injury. Road traffic injuries are the 8th leading cause of death globally. And what is also that 500 children die on the roads every day. You know, can you imagine 500 children every day? And road traffic injuries are leading cause of death for children and young adults aged 5 and 29 years. And okay, 54% of all road traffic deaths are among vulnerable road users like pedestrians, cyclists, and motorcyclists. For those who want to, because Deputy Secretary General Amina Mohamed was speaking about those risks coming from COVID-19, climate change, from disaster risk reduction. So for those who have these environmental concerns, the transport sector is responsible for approximately 23% of total energy-related CO2 emissions. And of course, the trend is continuing. So just to finish my statistical numbers, coming to economic cost, the very most known and recognized health journal or medical journal was publishing that estimated road injuries will cost the world economy $1.8 trillion between 2015 and 2030. So, and what leads us to its share to the global gross domestic product. And we know that in low and middle income countries, it can be from 5 to 6% of GDP, you know. Of course, 46.4 all those injuries happen is economic burden. 46.4 of the global loss is getting to the cost of the low and middle income countries, reflecting the higher earnings and productivity in high income countries, but also there is also prominently higher treatment costs. So it means that the treatment costs account for a greater proportion of the economic burden in high income countries than in low income countries. Okay, so why, your question was why I wrote the letter and what insurance companies have to do with the road safety. The United Nations is taking the action already in the second decade for action. So 2020 to 2030, we opened the second decade of action. And you mentioned correctly that SDG target 3.6, what is telling us the halving road traffic deaths and injuries by 2030. So despite the wealth of road safety technical knowledge, UN legal instruments, UN standards, and global status reports with UNEC, WHO, and others have developed, we had a first decade of action that ended in 2020 with very little difference to the 1.35 million lives being lost every year. However, in 2020 was very dynamic. We have effective special envoy, Secretary General, special envoy of the road safety. Many of you know him, is Mr. Jean Todt. We established 3 years ago the UN Road Safety Fund to finance projects that ensure knowledge transfer and help elevate critical aspects of national road safety systems in 125 low and middle income countries. So with the new decade being proclaimed, I personally saw the opportunity for new players to help make the target a success. Insurers are a natural and key part of road safety success story that is waiting to happen. And I also believe we have the common task, because insurance companies must be interested in, indeed, it is increasing their profit bottom lines if they have less those crashes, less of that burden. Together with the UN Special Envoy, I called upon global insurance companies to support the UN road safety efforts in the second decade of action based on their vested interest in reducing the high cost of road crashes to the insurance industry, as well as their commitment, commitment to the 2030 Agenda for Sustainable Development, which includes global road safety.
Yes.
So,
Thank you very
Okay.
Thank you very much, Executive Secretary Olga. I think that you make some really great points, which is really the nexus between, investments in risk reduction and also the value proposition around insurance. And that is not, it's in road safety, which you've offered a very tangible picture of how that can work, and, expanding that thinking into other sectors and areas of the SDGs. So I really do think that that's a great point. So I'm very conscious of time. So I would like to go back, because I think that one of the key things that I said earlier is I want to leave with key recommendations. So going back to you, Denis Duverne, I would like to get a steer from you. What would success look like in terms of reflections of risk and insurance in the SDGs?
So I'd like to offer two comments. The first one, you and Catherine indicated that there was a lot of activity around microfinance. And in reality, microfinance usually needs some form of insurance on top of it. On microloans, there is quite often a form of credit insurance that comes on top of it, because if the borrower dies, the microfinance institutions want to get reimbursed, and there is an insurance attached to it. So I think already insurance plays a more significant role than what people think on credit insurance, on payments, and on savings. Second, I believe that we need to show progress step by step. So I was very happy to have an interest demonstrated by the Economic Commission for Africa and the UN Economic Commission for Europe. I think we need also, with your support, to bring in the Economic Commission for Asia, the Economic Commission for Latin America in this dialogue. And then I think it would be extremely valuable if we could have champion countries who would see the benefits of insurance indicators and attach them to some of their SDG goals. So I really count on your support to further this dialogue, expand it more globally, and so that we can work together and make progress on this, on the importance of the insurance indicators in the SDGs. My ambition, as you can imagine, is not to change the SDGs. They are set for 2030, but clearly having some insurance indicators within them would make a lot of sense, and I think the world would be better with those indicators. Thank you. You take the mic, Ekosoi. Take the mic.
Thank you, Denis. I will go back to you, Catherine, because you are also someone that brings such tremendous experience in terms of the inclusive insurance space. What are your ideas, or what are the key recommendations, very quickly, in terms of how we can practically start to correct this issue?
Okay, so very quickly, I think a slightly different take from Denis, but also around the SDGs. I think it would be great to collaborate with insurers, especially global insurers, but insurers of any size and anywhere, to work with them to evaluate how they can incorporate not just the SDGs, but more of the ESG framework into their mainstreaming business models. And by that, I mean a global insurer might not be involved in low-income countries. That doesn't stop them from funding some of the work, like customer research, for example, that is needed to design products and services that will resonate with those customers and help to reach scale and bring the protection we need. So I think I'd like to put that out there as a suggestion.
Thank you, Catherine. And so I will now turn to you, Jean-Paul. And I've avoided putting you in the limelight for a very long time, but I will turn to you now, given the time that we have left. And I'd like to bring it back very concretely to the SDGs. And in October, earlier this year, United Nations Secretary General Antonio Guterres delivered his report entitled Our Common Ambition at the United Nations General Assembly. In it, he made a very compelling case for renewed solidarity between people, future generations, and also reference to a new social contract anchored in human rights and a United Nations that is upgraded so that it can meet the challenges of the new era. In there were 12 recommendations, and many of them overlap with the discussions that we've had here today. So, for example, the interventions from the Executive Secretary, Olga Algaerova, on risk reduction and the link to transport and, some of those elements, also social protection. But there are two in particular that I want to highlight, which was his significant reference to the importance of social protection systems and the role that they can play in terms of saving lives and backstopping economies. The second thing that he highlighted was a new global deal to deliver public goods and address major risks, and the development of strategic foresight and a global risk report and a high-level advisory board to guide this work. So I'm going to put the big question to you, which is, as the UN system, or from your perspective within the UN, how can we move this agenda forward? You'd heard from Denny, you've heard from Catherine on their perspectives. How can we move this forward in the context of the SDGs and this new agenda around our common ambition? Some practical ideas on ways in which we can take this forward and make it happen.
Thanks so much. And I think first of all, I think this discussion has been incredibly important in recognizing the role of global solidarity, which is really at the heart of the common agenda that you've mentioned from the UN Secretary General, and which I think is referenced as well in the intervention by the Deputy Secretary General that we heard earlier. And I think it's come out as well from all of the various interventions. And so we need to look about how we actually deliver that solidarity, and I think critically recognize that we're not there currently. We see that in terms of how we're reacting to COVID-19. For every one vaccine the WHO just published a statistic, for every one vaccine that's becoming available for low-income countries, there are 6 people in the developed world who are getting their booster dose. So that a lack of equality is a real issue, and we need to look at the means of delivering it. I think if we look at the Secretary General's point, the common ambition, which is being expressed in the common agenda, it's being translated in terms of practically having a high-level advisory body that's going to look specifically at those issues. There has to be advocacy with governments so that insurance is placed at the center of their responses, linking that with their budgetary processes and their planning processes. I think also we have to reach out to the private sector and facilitate using the convening functions, for example, of the regional commissions or the regional economic commissions of the UN, use the convening functions to bring governments together with insurance partners so that we can make sure that we are planning those interventions as part of the national and regional response to accelerating the implementation of the Sustainable Development Goals. And we saw, and the final point I'll make is that we saw at COP26 how the framing of the finance discussion is very important. At COP26, unfortunately, there was limited new financing being made available. The principle of investing through insurance is that you will ultimately have more effective investment if you're covering the contingencies and if you're covering the risks. We see that in agriculture, for example, in Africa, where it's been shown that the annual cost of investing in resilient agriculture, for example, through using resilient seeds and reducing the impact on the environment, the cost would be about $15 billion per year. But the cost of dealing with disasters after the fact is over $200 billion per year. And having mechanisms that can factor in those long-term costs and deal with them through upfront investments through insurance mechanisms is one of the most effective investments that we can make at the level of the continent. And I'll stop there for now. Thank you very much.
Okay, thank you very much. I see that we're 3 minutes over time, so if you give me the liberty, what I will say is really thank you to all our speakers for really sharing your insightful perspectives. I would like to conclude by perhaps drawing on a book that I recently read, and Catherine is very familiar with this, by the director of the LSE, Minouche Fik, which is a book that's entitled What We Owe Each Other, A New Social Contract. In it, she makes the case that at each stage of life, raising children, going to school, getting sick, finding work, and growing old, societies across the world choose different ways to pool risks and share resources, striking different balances between individual and collective responsibility, with vastly different outcomes for citizens. She posits a need for a paradigm shift, given major shift in priorities in our societies, and which will have profound implications for gender equality, healthcare provision, and role of business and the future of work. So as we ponder the future and consider the SDGs, I think that obviously risk management and insurance needs to be quite a central part of that in terms of how we deliver on this ambition of the SDGs and also deliver on the solidarity, which you have mentioned, Jean-Adam. So I'd just like to conclude with maybe some of the 5 highlights from my perspective that came for this, which is, I think there's clear consensus on the importance of this issue and the need for greater advocacy around the theme. There's an opportunity to strengthen advocacy around this topic broadly across the economic commissions and cascading that conversations deliberately into the discussions that we have with governments and leaders across the regions. Second element that came out for me was that for vulnerable populations, there is a fundamental need for better protection systems that are built on the way in which people live and work and the shocks that they face, and to design appropriate policies, strategies, and solutions that can help them, but also can lever a fundamental risk reduction. The third element that also stood out for me was the need to deepen the convergence with the financial inclusion conversation. Again, not only seeing credit, savings, and payments alone in isolation, but also including insurance in a very deliberate way as a fourth corner of the financial inclusion square to some extent, simply because insurance underpins a lot of those elements, touching on what Denis had referenced in terms of the link to credit. Fourthly, I would like to say that the global insurance industry, I think through this convening, through the IDF and the various platforms that we've engaged in, are willing and ready to collaborate on this. I think that ultimately the physical, industrial, and social transition that we will need to undergo at speed across all economies, again, to match the SDGs will require a form of public, private, and mutual insurance provision. And we should be thinking about what those should look like for our communities, if it is in developed countries and developing countries. And then fifth and finally, I would say the UN SDGs call to action through our common ambition makes a very clear call in terms of the need for better risk management and investments in social protection, and the need to turbocharge the SDGs. And obviously thinking proactively about risk, how does insurance fit into this picture? The role of the private sector in supporting those conversations is obviously going to have to be central if we're going to deliver on the post-2030 agenda. So again, just to conclude, to say thank you to all of you speakers, to all of those guests who have joined us for this conversation, for your participation in this meeting. And we look forward to moving this conversation forward. Thank you.
Thank you, Ekoswei.
Thank you, Ekoswei. Thank you, all of you.
Bye-bye. Thank you.
Thank you, Ekoswei. Thank you very much, everyone.
Thank you. Bye.